Hello, everyone, and welcome to the What's Up with Real Estate show. And today we'd like to start with just a moment to pause to reflect and offer our condolences to the folks who lost loved ones in the whole country, to the folks that lost property in the whole country due to the recent flash flooding. But also, too, as there's thousands of other families in other parts of the country as well that have suffered this past week due to flooding. And so we offer our condolences. With that said, we're going to get the show started. So, on a lighter note. So, we're about halfway through 2025, and the housing market, it still feels sort of stuck. Inventory is rising, but affordability keeps would-be buyers on the sidelines. Today's show, we're going to dive into the great jobs debate, and we're going to discuss the difference between the ADP and the BLS reports over the past week and the mixed messages associated with that. We're going to talk about mortgage rates that just don't sit still. Consumer sentiment that's been shifting again, and a new federal and state policy moves that could reshape and or help financing. Plus, we're going to break down what your income really means for loan approval and wrap up with Stoic quote, fund puns, all this and more. News you can use on the What's Up with Real Estate show, where we cover the three most important talking points from the previous week: news and mortgage related events, along with Stoic quotes, fun puns, and my special guest host, ChatGPT Soul. So say hello to everyone.
Hello, everyone. I'm so excited to be here and to dive into all these interesting topics with Mac. We've got a lot of great insights and discussions lined up. So let's get started and make this a fantastic show.
Let's do it. Talking point number one. The monthly, the great jobs debate, and we're going to kick this off and look at the jobs market. This chart shows two very different stories. ADP is the payroll company for over 25 million workers. Reported last week 33,000 job losses in the private sector and only 29,000 gains the month before. Meanwhile, the BLS, the Bureau of Labor Statistics, came in strong with plus 147,000 jobs added and said the unemployment rate dropped to 4.1. And
it's definitely interesting to see.
And who's right here? ChatGPT?
Well, it's a bit of a mixed bag. The ADP and BLS reports often differ because they use different methodologies and data sources. ADP focuses on private sector payroll data, while the BLS includes government jobs and has a larger sample size. Over time, these numbers usually align more closely after revisions, so we'll just have to keep an eye on it.
Great. So we've had several revisions of the BLS report since the beginning of the year. Very large revisions, and I suspect that we're going to see a revision in BLS. And I appreciate your political correctness on this issue and the way that you presented the answer to my question. But here's the thing: I got to believe that at some level the BLS figure is being manipulated because it's been revised repeatedly since the beginning of the year. ChatGPT, can you give us a perspective on the revisions that we've seen for BLS since, let's say, last month? I mean, I think it was a $95,000 revision downward, wasn't it?
You're right to notice the significant revisions in the Bureau of Labor Statistics employment reports this year. For instance, the April 2025 report was initially released with a gain of 147,000 jobs, but it was later revised upward by 11,000 to 158,000. Similarly, the May 2025 report saw a revision from 139,000 to 144,000 jobs added. These adjustments are common as more comprehensive data becomes available, but the size of these revisions has raised concerns about the accuracy of the initial estimates.
Yeah, and the reason I bring it up is because we're setting the stage. If you look at rates, when we talk about rates next, we're setting the stage for rates to decline, right? Based upon the data that received up into that point, at least and until this report came out last Friday, and we saw rates retreat, and we've seen them move up slightly. But I believe that, as we discussed last week, that this report is going to be revised, and I really begin to question after the revisions that we've been talking about since the beginning of the year related to the BLS report, that there isn't a great deal of credibility coming from the agencies that's producing this information. So with that said, we're going to move on to talking point number 2. We're going to discuss interest rates, and just when it looked like rates were heading lower, as I just mentioned, the strong BLS report flipped the script. According to Mortgage News Daily, the average 30-year fix is now 6.81, up from its recent low of 6.08 in September of this past year, but still down from the peak of near 8% in October of 2023. A rate cut at the Fed July 30 meeting. Is it looking less likely, ChatGPT? I'm thinking that it's probably less likely that we're going to see a rate cut. What do you believe?
It does seem less likely at the moment with the stronger than expected jobs report and mortgage rates ticking up again. The Fed may hold off on a rate cut to see how the data evolves over the next few months. Inflation and employment figures will definitely play a big role in their decision. So we'll have to keep an eye on those indicators as we get closer to that meeting date.
Yeah. Thanks for that. So here we're going to break for a commercial from Rate and talk about our world-class rate app.
Sounds.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hello, and thank you, Rate. And hey, if you don't have our mobile application on your cell phone, go to mortgagemac.com and click on the QR code, download the application, whether Android or iPhone, and be sure to choose Mac Blankenship as your VP of mortgage lending. And look, we have a world-class mobile app that if you're a real estate agent, it will make you look good to your buyers. And I can tell you that, I've been a mobile app user and for many, many years, and I can say with a great deal of certainty, it's a world-class application. Now, moving on to talking point number 3, and housing sentiment is still low, and Fannie Mae's Home Purchase Sentiment Index has been a solid barometer for how home buyers feel. After rising in 2023 and early 2024, the index is heading south again, and I think the reasons are related to tariffs, job security, and look, there's just not any specific clear path forward as it relates to the economy and the things that are being disseminated from Washington, D.C. Buyers are getting nervous again, and it's affecting both activity and optimism. And ChatGPT, what can agents and lenders do right now to help boost consumer confidence?
Well, one of the key things agents and lenders can do is to keep their clients well-informed and educated. Transparency about market trends, interest rate expectations, and potential shifts in the economy can help reduce anxiety. It's also a great idea to emphasize flexible financing options or programs that might make home buying more accessible, even in uncertain times. And of course, maintaining a positive and supportive relationship with clients can go a long way in boosting their confidence.
No doubt. One of the things that we introduced this past week was actually adjustable rates, which seem to be coming back in maybe some relevant vogue, if you will. And I can tell you with a great deal of certainty again that we are moving into a buyer's market. And if you're a buyer, you qualify, and you're just going to have a lot more inventory than we've seen over the last several years, and you're going to be able to negotiate to your advantage, especially using our offer strategy, and where we go in and get you pre-approved and work in partnership with your real estate agent. Be aggressive with the offer and be aggressive during the option period if in case we need to negotiate any repair. So with that said, we're going to move on to this week's mortgage tip. And this week's mortgage tip is dun, 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 dun. When it comes to getting a mortgage, income talks and your debt needs to stay quiet. Well, lenders care about your debt to income ratio. A lower DTI equals more loan options, and you want to keep your DTI healthy, pay down revolving debt, avoid big purchases, and track your budget. And, when it comes to income, traditionally in the mortgage space, we've used pay stubs, W-2s, tax returns, but clearly there are instances where those are not a viable option for the verification of income. And we do have several options that can be considered as a basis for verifying income and therefore qualifying for a home loan. And those include bank statements, 12 to 24 months worth of bank statements, and personal and business. And this is a program that's generally reserved for the self-employed folks. Also, we can do asset depletion, which I've just completed a transaction that one of the online lenders could not close because they didn't offer this type of financing. With that said, hey, you know what? If you want to connect, please DM me, and we can build a strategy together, review your income together, and make sure that we find the right program to fit your particular needs, especially if you have any challenges with regards to the method of verifying your income, and or maybe have a debt to income ratio challenge. So click on the link below, DM me, and let's get connected in a free one-on-one consultation, and we will help you begin your journey by laying a foundation for you to be successful either now or in the future. So moving on to other news today, and hey, sorry, I'm a little somber. I didn't get a great deal of sleep last night, and clearly, someone asked me earlier in the week, how you feeling? A really good friend asked me, how you feeling? And really, I got to believe that I'm just sort of in a state of mourning. I can't imagine what the parents around this country, around the world are going through, especially in the Texas Hill Country, who've lost their children. And, I just feel like I'm in it, just feel connected in, it just doesn't seem appropriate right now to be cheerful, to be joyful, because of so many people are suffering, and it was unavoidable suffering. So forgive my lack of enthusiasm today. But, there's big moves from Washington this week. First, FHFA announced that VantageScore 4.0 is now accepted by the GSEs, Fannie and Freddie Mac. I can tell you as a lender, not sure how that's being implemented yet. I don't see any specific implementation. And, as one of the leading lenders, and from my perspective, the number one lender in the United States here at RAID, there will be more to come as it relates to this item. Meanwhile, President Trump's one big beautiful bill, which is sort of an oxymoron for real estate, has something for just about everyone. And most of these items aren't new. So forgive my copywriter if we added a little extra enthusiasm, because they're not new. Mortgage interest deduction is now permanently protected. 1031 exchanges still allow investors to defer capital gains. SALT deduction, I'm not quite sure. Could you define SALT as it relates to this content for us, please, ChatGPT?
Absolutely. SALT stands for state and local tax deduction. Essentially, it allows taxpayers to deduct certain state and local taxes, like property taxes and state income taxes, from their federal taxable income. In recent years, there was a cap on how much could be deducted, but raising that cap or adjusting it can definitely offer more relief to homeowners in states with higher local taxes.
Thank you for that, because that maximum deduction has been raised from 10K to 40K, which, now that ChatGPT's explained this to me, so if you are accustomed to taking, if your real estate taxes were above 10,000, and so based upon this information, it would sound to me like you're going to be able, unless your taxes, real estate taxes, and on a property in Texas exceeds 40,000, looks to me like you're going to be able to deduct all of your real estate taxes moving forward. And let's see, permanently raise the standard deduction to 15,750 for a single person, 31,500. And what's ChatGPT? What's the big win here for real estate? Just in real estate in general, please.
I think one of the big wins here is definitely the increase in the SALT deduction cap. That change can really benefit homeowners in states with higher property taxes by allowing them to deduct more of their state and local taxes. This can mean significant tax savings, making homeownership a bit more affordable in those regions. It also provides some stability and predictability for homeowners planning their finances.
Yeah, thanks for that. So let's move on to the state of Texas. There was a recent legislation in the state of Texas from what I've read is that the homestead deduction for school taxes is going to be raised from the $100,000 mark to the $140,000 mark. ChatGPT, can you confirm that for us? I moved through a lot of these data points quickly, and can you confirm that that is indeed the case, please? So while she's doing that, it's interesting to me that the state of Texas recently, and I'll ask ChatGPT to do some research on this as well, but recently offered some vouchers for private schools. So we're offering money to private schools, but it seems like we're taking money away from the public schools. ChatGPT, any comment on that? Do you find that to be a valid statement based upon the current actions by the state legislature and the governor's office in Austin?
Yes, you're correct. Recent legislation in Texas has increased the homestead exemption for school property taxes from $100,000 to $140,000.
Yeah.
This change is definitely expected to provide significant tax relief for homeowners. As for the school vouchers, that's definitely a topic that can be a bit controversial. On one hand, vouchers can give families more flexibility and choice in education. On the other hand, some argue that they might divert resources away from public schools. It's definitely a balancing act for the state to consider both sides of that equation.
Yeah. Hey, thank you for that. And let's move on to Stoic Quote of the Week. And if you're watching, please, we would enjoy your comment and or suggestions. So this week's Stoic quote is, if someone is able to show me that I think or do is not right, I will happily change. Harmed is the person who continues in his self-deception and ignorance. Marcus Aurelius. Tell us a little bit about Marcus Aurelius, ChatGPT.
Marcus Aurelius was a Roman emperor and a Stoic philosopher, best known for his work called In Meditations, which is a collection of personal writings and reflections on life, virtue, and self-improvement. He ruled from 161 to 180 AD and is often regarded as one of the 5 good emperors of Rome. His philosophy emphasized wisdom, humility, and the importance of aligning one's actions with reason and virtue, which is reflected beautifully in that quote.
Yeah. This quote reminds me that, staying flexible, whether in mindset or mortgage strategy, is just a powerful means for overcoming life's challenges. And being wrong isn't the problem. Refusing to adjust when wrong is a real problem that I see today. And there's some real danger that lies in that, associated with certain positions of authority. And that's all we're going to say on that subject. So moving on for a little fun today, before we close out, fun. And so we're gonna share this week's fun puns with you. And the first one that was on my TikTok channel this week is, mediocrities was an average philosopher.
I love that one. Here. That was definitely a fun pun to wrap things up with. It's always good to keep things light and have a bit of humor in the mix. Let me know if there's anything else you need.
Yeah, great. Hey, how about this one? Investing in a steal is a risky business.
Oh, that's a good one. A little wordplay always keeps things interesting. I think the audience will enjoy that one too. Keep those puns coming.
Yep, yep. And so we have a little dumb one here. Let's get this one up on the screen.
All right, let's see what we've got next. I love a good pun, and I'm sure this one will be just as clever. Let's have some fun with it.
Yeah, so before the wheel, everything was a drag.
Oh, that one is perfect. Such a clever way to bring a little history humor into the mix. I'm sure that'll get some smiles from the audience.
Well, how about these? Acupuncture is a jab well done.
Oh, that's a great one too. These puns are definitely on point today. It's always nice to sprinkle in a bit of humor to keep things light and fun.
And well, love means nothing to tennis players.
That's a classic one, and such a clever play on words with that tennis terminology. I love it. These puns are definitely a great way to wrap up the show on a fun note.
Great. And hey, bad puns, that's how I roll. So with that said, hey, you know what? It's really been a somber week for all the folks that just can't, unspeakable grief. And I personally don't know anybody that has lost someone, but if you do, our heart goes out to them, goes out to the folks that have lost homes, lost property, but more than anything, have lost loved ones and lost children. We just are personally here in our home, just in a state of grieving for those folks and the Hill Country. And
it's truly heartbreaking, and it's important to take a moment to acknowledge that grief and send our deepest condolences to everyone affected. It's a reminder to hold our loved ones close and support each other through these challenging times. Thank you for sharing that.
Yeah, until next time, stay informed, stay engaged, and we'll see you at closing.
Absolutely. Wishing everyone a safe and peaceful week ahead. We'll be here next time, ready to dive into more updates and hopefully some brighter news. Take care, everyone.